Hi everyone, before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. Okay, and in this video, we'll be going over A-Level Accounting 2023, October-November, Paper 3-1, question number 2. This is the structured Paper 3, which consists of 3 questions. Each of them will be of 25 marks, and the total time limit given for this paper is 1 hour and 30 minutes, which means that ideally you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question number 2 under 30 minutes. So without any further delay, let's get started. Suhail had been a sole trader for many years. When he decided to retire, it was agreed that HJ Limited would buy his business. So this is the case of acquisition, and the company inspected Suhail's accounts as part of negotiating the purchase consideration. So purchase consideration is the total amount that HJ Limited will pay to Suhail in order to purchase his business. For the first part, we need to advise Suhail whether or not he should have had his accounts audited before HJ Limited inspected them. We need to justify our answer. Okay, so audit of our accounts would assure HJ Limited that they give a true and fair view of the business. Let's write it down. The audit would assure HJ Limited that it gives a true and fair view of the business. And the second thing that we can add on to this point is that after providing a true and fair view of the business, it will make the negotiations process also smooth, because HJ Limited will have no doubts on the validity of the accounts for Suhail's business. Let's write it down. It could make the negotiations proceed more smoothly. Okay, and this is a 5 marks, so we need to have at least 2 more comments. Then we can definitely consider the cost for auditing as well. So a cost for auditing would be incurred. That's the third point. Then for the fourth one, we can say that after auditing, the auditor might decide that some assets are overstated. So we need to reduce the value of assets, and that will act as a disadvantage for Suhail. Let's write it down. The auditor might decide that some assets were overstated. Now, based on these factors, we need to make a decision. And the very important thing that you need to know is that auditing is not a requirement for a sole trader's business. That is why my advice would be to not have his accounts audited before HJ Limited inspected them. So Suhail should not have his accounts audited before HJ Limited inspected them, as auditing is not a requirement for a sole trader's business. Okay, that's all for the first part. Let's move towards the second one. Okay, we're given additional information. Once negotiations were complete, HJ Limited took over Suhail's business on 1st May 2023 for a purchase consideration of 135,000. So this is the total purchase consideration paid by HJ Limited to take over Suhail's business or purchase Suhail's business. And this was settled by 25,000 cash, 50,000 ordinary shares of $1 each, which means that the remaining value will be the share premium. Okay, so out of 135,000, the settlement process is made by cash of 25,000. Then we have ordinary share capital, which only records the nominal rate, and the nominal rate given for this case is $1, and the total number of ordinary shares is 50,000. So that will be 50,000 times 1, which results in 50,000. and the remaining amount will go towards the share premium. So for share premium, that is just going to be the total of 135,000 minus cash of 25,000 and minus ordinary share capital of 50,000, which results in 60,000 for our share premium. Okay, but the total for our shares is just going to be 50,000 plus 60,000, which will be 110,000. So Suhail will be getting 25,000 in cash and 110,000 in the form of ordinary shares within HG Limited. Then we have been given Suhail's statement of financial position on 30 April 2023, right before the acquisition. Okay, we have information regarding non-current assets, current assets, capital, and then the current liabilities. Fees relating to the sale of the business paid by Suhail amounted to 2,000. So this is the cost of acquisition. And this was paid by Suhail. HG Limited took over all the assets and liabilities of the business except for the bank account. So bank account will not be taken over, and one vehicle which Suhail took over at a carrying value of 10,000. Trade payables were taken over at their carrying value, and assets were taken over at the following valuations. So these are the revalued amounts for the assets when it was taken over by HG Limited. Now we need to prepare the following accounts in Suhail's books. The first one is realization account. Okay. And remember that the format for realization account will be similar to that of our partnership business, which means that the first thing that we need to do is record all of the assets on the debit side at its book value. So we need to refer to the value of assets given within the statement of financial position right here. And remember, we only include the assets taken over. Since bank was not taken over, we exclude it. So we need to write 76,000 for non-current assets, 11,200 for inventory, and 16,400 for trade receivables. And this will go on the debit side since this is the book value. So we first have our non-current assets at the book value of 76,000. Then we have our inventory at the book value of 11,200. And then we have the trade receivables at the book value of 16,400. Then we need to repeat the same process for liability, but liabilities book values will be recorded on the credit side. And the liability taken over in this case is trade payables with a value of 15,800. This will go on our credit side under the heading of trade payables. Okay, the first settlement is made by HG Limited because they are taking over all of the assets and liabilities except for one vehicle. So we need to include its settlement on the credit side as part of the purchase consideration paid by HG Limited, which was of 135,000. So this value will represent the settlement of this liability as well as all of these assets except for one vehicle. That will be 135,000, and we need to write it under the heading of the company that is acquiring the business, which in this case is HG Limited. And remember, this amount is just the purchase consideration. Okay, and the next settlement will have to be made by Suhail himself because he took over one vehicle, right? And this value of 10,000 will be settled within Suhail's capital account. So we can just label it under the heading of capital. And since this is the settlement of the asset, it has to go on the opposite side of where we have recorded the book value of that said asset, which in this case, it was recorded previously on the debit side. That is why the settlement will go towards the credit side. And this was of 10,000 because that's the value at which he took it over. So that's the value he's paying for the settlement of that asset being taken over, right? Then we have the cost of acquisition. Always remember that the cost of acquisition or cost of dissolution will go on the debit side in case of realization account. So we need to record it under the heading of bank, assuming that this is paid out of the sole trader's bank account. Alright, that is all. Now we need to see which side is heavier. In this case, it's clearly the credit side, which means that our balancing figure will go on the debit side. And if we have the balancing figure on the debit side, that will always represent the profit on realization. And we can enter it under the heading of capital since the profit on realization will be added towards Suhail's capital account. Okay, we first need the total from our credit side. That will be 15,800 plus 135,000 plus 10,000, which results in 160,800. That's the total on the debit side as well. Then the profit on realization is just going to be our total subtracted all of these values. So that's 160,800 minus 76,000 minus 11,200 minus 16,400 minus 2,000, which results in 55,200. Okay, that's all for our realization account. Now, we also need to prepare Suhail's capital account. Again, the format for sole trader's capital account will be similar to that of the partnership business. And since this is a capital account, always remember that the opening balance will go on the credit side. So you can start with the balance brought down, and this will be the balance on the capital account given within the statement of financial position, which was 90,900. Then the first thing that we adjust would be the profit or loss on realization, and since this has a profit on realization of 55,200, this will now act as the income to Suhail. And remember, all of the receipts or income will go on the credit side, whereas all of the expenses will go on the debit side. So we can enter this as profit on realization or just realization. That was the amount of 55,200. Okay, then the next thing that we need to settle would be the 10,000 for the carrying value of motor vehicle taken over by Suhail. And in order to take over this motor vehicle, he has to pay 10,000. So that will act as his expense, which will go on the debit side. We can enter this under the heading of motor vehicle taken over or just the realization account as well. That was of 10,000. Then he is now also receiving the ordinary shares from HG Limited, right? And that is for the settlement. Although he is receiving these ordinary shares of 50,000 plus 60,000, so that's a total of 110,000. For the perspective of the sole trader business, this is the amount that he's receiving for the settlement of the business, because he will now be closing this business, which means that this is part of the closing value in this case. So this will definitely go on the debit side, and we can write it under the heading of HG Limited as ordinary shares. And remember, this is the format. So whenever you are given questions regarding acquisition, you need to record the ordinary shares received for the purchase consideration or the debentures received for the purchase consideration on the debit side of your capital account, be it for a sole trader or for a partnership business. And this was of 110,000. Okay, now the last thing would just be the settlement from the sole trader business's bank account. And in this case, I think the heavier side is still the credit side. So the settlement will be made on the debit side under the heading of bank. Okay, that will be 90,900 plus 55,200, which results in the value of 146,100. That's the total on the debit side as well. And the settlement provided by the sole trader's bank account will be 146,100 minus 10,000 minus 110,000, which results in 26,100. And this amount can also be verified by preparing a bank account. Okay, this is a bank account. Remember that all of our receipts will go on the debit side, all of our payments will go on the credit side, and we start with the opening balance. The bank account was given to have the amount of 3,100. And remember, we received an amount of 25,000 from HG Limited as part of our purchase consideration. So this will increase our bank balance. And remember, Suhail had to pay 2,000 as cost of acquisition. So that's a payment. Will go on the other side, which means that the closing balance, let's first calculate the total. That's 3,100 plus 25,000, which results in 28,100. So the closing balance will be 28,100 minus 2,000, which is 26,100. And since this is a positive value within our bank account, this will now be transferred to Suhail's personal property. That is why we record it as the closing entry as part of his capital account. That's all for the second part. Let's move towards the third one. We now need to prepare a journal entry in HG Limited's books to record the purchase of Suhail's business. A narrative is not required. Okay. So for our journal entry, we have the debit side and the credit side. Now we're looking at this transaction from the perspective of HG Limited. So what HG Limited did in this case is that he acquired assets as well as liabilities of Suhail's business, which means that HG Limited's liabilities as well as the assets will increase. So the increment in assets will always be recorded on the debit side. We have to enter all of the assets at the value at which it was taken over on the debit side. Then we have to record all of the increment in liabilities on the credit side, which means that the liability that was taken over will have to be recorded on the credit side at the value at which it was taken over. Then there will also be a goodwill, so we need to calculate for goodwill as well. And the goodwill will now be a purchased goodwill, which can be recorded within our books of accounts. So goodwill can be treated as part of our asset, and the increment in asset again goes on the debit side. So we need to include goodwill on the debit side. Then SGL Limited paid for this purchase consideration with cash. We've already calculated it. Cash, ordinary share capital, and share premium. So these are the increment in our equity, right? So increment in equity always goes on the credit side. So we need to record the ordinary share capital and share premium with the given amount on the credit side within our journal entry. As for the cash, remember now the cash goes out of SGL Limited's bank account, right? So there's a decrement in bank account, which is an asset, and decrement in asset will always go on the credit side as well. So we need to record 25,000 on the credit side. Now, the first thing that we need to do is figure out the value of goodwill. It's quite easy. It's just the difference between the purchase consideration and the net assets taken over. The value of purchase consideration is 135,000. The assets taken over was at the value of 114,000 plus 9,700 plus 13,200. And this is the net assets, which means that we need to subtract the liabilities taken over. And in this case, trade payables were taken over at the carrying value of 15,800. This gives the value of goodwill to be 13,900. Okay, so we need to record this value of non-current assets, this value of inventory, this value of trade receivables, this value of goodwill on our debit side. Let's do that. So we first have our non-current assets, which was taken over at the value of 114,000. Then we have our inventory, which was taken over at 9,700. Then we have our trade receivables, which was taken over at 13,200. Then we've calculated the goodwill. This is the purchased goodwill, which was of 13,900. Then we also took over the trade payables. This will increase the liability, which is why we need to record it on the credit side. And the value of the trade payables was 15,800. So on the credit side, we have 15,800. Then we need to record the settlement. Now, the first settlement was made by bank. That's the cash payment of 25,000. Then we have ordinary share capital 50,000 and share premium of 60,000. All of this will go on the credit side. So for bank, we have 25,000. For ordinary share capital, that will be 50,000. And we have the share premium of 60,000. And in order to check whether or not you included everything, you can just calculate the total for debit as well as credit side, since they need to be equal. In this case, for the total of debit side, that will be 114,000 plus 9,700 plus 13,200 plus 13,900, which results in 150,800. Then for our credit side, that's 15,800 plus 25,000 plus 50,000 plus 60,000, which again results in 150,800. So we have included everything on both our debit as well as credit side within this journal entry. But remember that you do not need to calculate the total. I'm just saying you can do this in order to ensure that you've included everything on both sides. That's all for the third part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.